The Bitcoin price action has been pushing to the downside, and we are getting dangerously close to breaking our bullish structure and starting to see a turn in the market. In today's video, we are going to be jumping down into the technical analysis on Bitcoin, taking a look at what's been going on most recently and what I think is likely to happen next. Let's roll that intro and get right down into it. Okay guys, so here we have a Bitcoin paired up with USDT. We're on the 1 hour time frame and Binance is our data source. Now, as you can kind of see here, we have our current swing low down on this $42,821 low. Okay, and we have our swing high just up here at $44,488. Okay, now as you can kind of see, we keep coming down a little bit more, and most recently we're finding resistance up here on that 50 EMA and 50 SMA. Okay, so we're starting to see a bit of a downturn on that price action when it comes to Bitcoin. And so if we actually take a look at our structure here, what we're talking about is having a fifth wave movement to the upside. This fifth wave movement has an overextension in the fifth wave. That's kind of what we've been tracking here, with our target range being up here at $45,141 to $45,550. Okay, now with this most recent move to the downside, we can note that it isn't just a three-wave structure. It is, in fact, a five-wave structure. There's two different scenarios here that could play out. We're either going to be in a reversal pattern with a diagonal-based pattern, which will basically be a wave 1, wave 2, wave 3, wave 4, wave 5, like this. Okay, and it'll be under that expanding diagonal. We've talked a lot about those recently. So you can see here, this would be an expansion to the larger side. You see here it comes out. So we would be expecting a big wave 5 in this particular case. Okay, and then the other option is a 5-wave count under a corrective structure, which would be a W, X, Y, X and Z. Okay, and with that parameter of a W, X, Y, X and Z, you would expect our kind of price to retrace down between 50 and 123.6. So let me show you that on here. So it would be this right here down to here. Okay, and why does this potentially cause us a bit of a problem? This causes us a bit of a problem because our invalidation or our confirmation of breakdown occurs when price crosses this area here at 42,420. Now, this particular Z wave would narrowly miss this, but if a wick were to come down any deeper, we would see a complete breakdown of the bullish 5-wave count that we've been kind of keeping an eye on to the upside. So a word of warning right now, Bitcoin is on the cusp of reversal. There's limited upside and a lot more to the downside. So essentially, I think if I were to kind of be trading this one, I would be looking more for short positions than I would be looking for long positions. That's not to say that I'm going to go short right here, because I think that's not necessarily going to give you really great risk reward ratios and things like that. But ultimately, I don't see a bigger move to the upside outside of this fifth wave movement at that 45,139 to 45,550. So we know that there's going to be limited upside and there's a hell of a lot more room to the downside. So it's all to kind of play for here on BTC, one with a more bearish situation than the other. But for the most part, I think we need to kind of consider that where we sit right now, Bitcoin is quite fragile. So we hope for a bit of a move to the upside. We definitely do have momentum on the 4-hour and 8-hour charts now to help us lift price up towards our fifth wave target. We just need to make sure that we do not cross down any lower than $42,420, because that will break our structure and will only have a mediocre bounce at best afterwards. It will be interesting to kind of see how all of that does play on out here for Bitcoin. Now, as I said, on the stochastics, we can see price coming down a bit. price coming down and stochastics coming down quite nicely. We take the stochastics off and throw the divergence indicator in. We can see that the RSI is also correcting down, but there's no divergences here, no bearish or bullish divergence, no hidden bullish or hidden bearish divergences. So we don't have to worry about that right now. Volume profiles obviously are still decreasing. They did spike up as we pushed down though. So if we dissect what's going on here, we had high volume coming in to take us up to the higher ranges, and then volume does drop down as we start to correct down. This is actually a positive thing. It allows you to kind of take a look at things as slightly more confident to that kind of structure that we find ourselves in at the moment. We can throw a parallel channel into here, and you can see that all essentially we're doing here is waiting for that breakout to the upside. One of the things I talk about a lot on the channel is higher highs, higher lows breaking down, and lower highs and lower lows, well, they have a tendency to want to break out to the upside. So we have a little bit of confidence there with those things. So for the most part, I'm not like terribly too concerned, but I am thinking that volume profiles are, spiking up at spots. So just be a little bit nervous with that. So other than that, on the hourly chart, we're looking okay. Let's take this out to the daily. Okay, so the daily, we are, of course, talking about kind of just completing that fifth wave movement. What we're really talking about, guys, is that there's a 5-wave count going on here, and we're just waiting for that fifth wave move. Okay, so we have this big extension into that fifth wave movement. It is obviously as a part of an expanding diagonal. The fifth wave is the largest wave. Wave 3 is not the shortest wave. It fits all the rules of Elliott wave theory within the diagonal pattern, with the exception of this being a 5-wave structure. It shouldn't be a 5-wave structure. So we want to be a little bit cautious with that. But for the most part, again, we take a look at this, we can see this higher range here, 42,976, 45,456, and we're right kind of thinking about that upper end at 45,550. So all that's looking good for reversal. This is where we find that resistance. This is where we kind of see that downturn. You can start to see a little bit of a downturn on the stochastic RSI, just as we start to have a little bit of downturn on the price. Okay, so momentum is shifting it to the downside on the daily time frame. On the divergence indicator, outside of that hidden bullish divergence that we saw before we got this big 5-wave move, there's nothing else here. We are overbought on the RSI daily time frame as well, so we're going to be looking for moves to the downside and shifting momentum downwards rather than upwards. Volume profiles, obviously I've shown this many times. You can see how volume profiles at the beginning of 2023 were strong, and then absolutely drop off a cliff here. Now, this is the Binance data, but the same thing can be seen across different exchanges as well, depending on how much volume they had previously. If they had loads of volume before kind of March 2023, then you tend to find that the volumes drop off. And if they had really low volumes to start with, well, the volume profiles don't change too much. It all depends on how much volume was going through there overall anyway. But for the most part, volumes are down. Now, that means obviously is something that I spoke about yesterday, which is how does price move up if the demand is low? And well, that comes down to the fact that the supply is coming away from the exchanges, and everything is about supply and demand. And so if demand is not there, then the supply has to be shrinking in order to get the price to move on upwards. And so what we have to consider there is, okay, well, Bitcoin's moving away from exchanges. We can see that in the first few quarters of this year. 750,000 Bitcoin left the exchanges. With 750,000 Bitcoin leaving, demand not changing, we kind of have seen essentially a reason for price to push on upwards like this. Again, the DXY also has its part to play in that. So as we kind of piece things together, it looks more and more likely that we are seeing, the price action of Bitcoin being manipulated through the DXY, as in Forex traders are inadvertently potentially creating moves specifically earlier in the year for other assets in the crypto market to spike up as a DXY drops down, as in if you're basing it by the dollar value and the dollar value is worth less, or you has less spending power on that dollar, then essentially you're going to have to spend more dollars to equate the same amount of assets. So you see that element, and then you see the element of Bitcoin leaving the exchanges, forcing a supply-demand imbalance, and well, you get a recipe for a move to the upside. What you're really wanting to do is you want to see all of those things happen all at the same time with increasing demand, and then really you're talking about new all-time highs. We aren't there yet, though, but I do think there's a recipe there for getting us up to those points. So taking a look at everything here, it probably wouldn't take a lot to bring this market back down just by creating another imbalance in that supply by making more Bitcoin available for purchase than the demand can handle. And since there isn't a lot of demand, I don't think it's going to take a lot of supply to really bring this back down. So we want to be really cautious about that. On the weekly time frame, parallel channel testing the higher ranges here. As you can kind of see, we probably still expect a bit of a move to the upside. We're about 8 weeks up here. I think 1, 2, 3, 4, 5, 6, 7, 8 weeks in green. It's on the extreme end of how many weeks we are typically in green before we start to see reversals. For example, you can see here 1, 2, 3, 4, 5, and then we start to see reversals. You can argue it was 8, and then we saw reversals there. 1, 2, 3, 4, 5, 6. You could kind of argue that you kind of have 5 to 6 here before you start to see downturns. And of course, in that real big bullish market, you can kind of see 1, 2, 3, 4, 5, 6, 7, and then you kind of see stagnant and then moves upwards, and so forth. So we're in a real interesting point here where we haven't had big growth in this kind of 7-week period in the same way that you would have when you have these kind of parabolic moves over that side in the previous bull market, but actually they're quite kind of reserved. And I think that really comes down to the fact that there just isn't the demand just yet. And if the demand was there, we would probably already be up at new all-time highs. So with lack of demand and the fact that supply could come in and just drag this down, a few interesting areas of price that I'm interested in, or areas of price action that I'm thinking is likely to be pretty positive areas for kind of support, right? So we have 36 to 37,000, we have 30 to 31,000, we have 24 to 26,000, and then 19.5 to 21,800. That is going to be the key areas I think that we're going to find. Now, what I mean by all these kind of key areas of support is that we probably bounce from these and we probably work our way down a little bit here, and I think we'll probably find previous support to become resistance. And so there's a few key areas that I think, we are likely to kind of be retesting at some point. That's not to say that we do all of them. It's just an idea that you can kind of see here, that you find support, then it turns into resistance. You find support, then it turns next point, the point previously turns into resistance, and so forth. I think that we're going to have to kind of retest some of these quite extensively. So the first thing that we want to focus in on, considering price is above 40k, is going to be this one right here to start with at $37,000. That's going to be your first one. Lose that, then of course we're talking about that second one at 30 to 31. Lose that, and well, you're retesting some of these existing lows down here at 24, 26. You cannot rule them out. Now, as I spoke about yesterday in terms of capitulation events, we obviously do see previous bull markets and bear market cycles. You can see, let me find this. So as my walk and talk yesterday, I was talking about how you had the bear market low point, and then you have a second capitulation that happened in 2018's low and 2020 pandemic. But you also had the same thing previously over here. You had the bear market low, and then you have your second capitulation before you really kind of get ramped up into that next kind of bullish market. If you go back even further, you can kind of see here that this wick, I guess you could kind of argue, is the same thing. You have this big move up and then big moves all the way back down again before going upwards. And again, so if you take a look at this, you'd have your bear market low, and then you'd have your second capitulation. And so we take a look at the data and we say, okay, well, we've had the bear market low point, but we haven't had that second capitulation. Now, in all fairness, and we should be fair with this, you can see the pandemic crash as maybe an anomaly. Our capitulation event would have been here, which was about a 50% move, maybe 40. Let's go ahead and check on that price action. It was a 53% reduction, okay, before we kind of started to come out. Now, we can argue if the pandemic wasn't there and we didn't have that pandemic, then it was a 53% capitulation event. If we have that now on the price action, well, we are going to be testing that $20,000 to $21,000 range, right? So we have to kind of consider that if we kind of have these capitulation events, which we have seen previously, and if history does tend to repeat itself, and this one was only 37%, then we are going to be seeing some significant reductions, right? We'll talk about 26k or we'll talk about 20k. It's going to be somewhere in those ranges. So I guess I wanted to put this video out there, kind of give you a bit of an update as to kind of what I think is going on with the price action and where I think things are heading, but also kind of just give you a little bit more clarity over why I think there's going to have to be a healthy correction to the downside. There's many reasons. You've got the Bitcoin spot ETFs, which I think will be a sell the news event. We've got Fed pivot. We've got these second capitulation events. Now, there's many reasons and rationale just out of those two examples. Pick and choose kind of what you think it's going to be. It could be a completely black swan event that we just don't know about, right? But for the most part, I'm expecting this move to the downside, and I think it is going to be a fantastic opportunity to make sure that we layer into our positions before we get those parabolic runs, which I do think are coming, as we are going to be entering into one of the biggest bull markets that we've seen in crypto history. I'm going to leave the video right there though, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, and I'll tap the bell, select all the notifications, and I'll catch you all in the next one.